Welcome back, students, to Accounting 1304, Introduction to Accounting 2. This is Dr. Mercado, and we are continuing covering Chapter 13, which deals with accounting for merchandise inventory. In this particular lecture, I am going to be going over problem 13-8. Please make sure that you read your chapter before you attempt your assignments, and if you have any questions, you reach out to me Monday through Friday. You can send me a Blackboard message, an email, a Pronto message, a text message, whatever works for you, okay? So we're going to be jumping into problem 13-8. I don't want to take too much of your time, okay? So problem 13-8 deals with the gross profit method, okay? I decided to cover this particular problem because it does not have a video in Cengage for you, and that way I could have an extra resource for students in case they didn't quite understand what they needed to do in this particular problem. So this problem states, a fire completely destroyed all of the inventory of Glisson Lumber Yard on August the 5th. Fortunately, the accounting records were not destroyed in the fire. The following information is provided by Glisson Lumber Yard for the time period of January 1st through August the 5th. So, the warehouse, I guess, where they had the stuff burned down, and the accounting records did not. So now we have to estimate the amount of merchandise inventory that was destroyed in the fire. They are giving you the beginning inventory as of January the 1st of $100,000. They're giving you net purchases during the period of January 1st through August the 5th of $420,000. We had net sales from January the 1st through August the 5th of $732,000, and the normal gross profit as a percentage of sales was 40%. Now, using the information provided, we have to estimate the amount of merchandise inventory destroyed in the fire on August the 5th using the gross profit method, okay? Now, I got this straight out of your book. The gross profit method is defined as a method of estimating inventory in which a business's normal gross profit percentage is used to estimate the cost of goods sold and the ending inventory. Now, this calculation is appropriate only if the firm's normal gross profit as a percentage of net sales has been relatively stable over time. So that gross profit percentage has to be stable. If it's 20% one month, 30% the following, 50% the following. If it's not stable, then you can't really use it. It's only good, it's only valid if it's stable. Okay? This type of calculation can also be used to test the reasonableness of the amount of inventory that was computed on the basis of a physical count. So if you go out there, you count your physical inventory, then you come back to your office and you utilize the gross profit method to estimate the amount of inventory you should have on hand, those numbers should be very similar. Okay? A large difference between the two amounts might indicate a mistake in the count, a mistake on the costing of the items, or a marked change in the gross profit rate. Okay? Now, the gross profit procedure also can be used to estimate the cost of inventory that was destroyed by fire or other casualty, which is what we're going to be using it for. Okay? So, all of this, and there's more information on your ebook. Make sure that you go back, you locate this section, and you read it. So, let's get ready to work out this problem. So, the first thing we're going to do is we're going to calculate the cost of goods available for sale. Okay? We're going to start off with our beginning inventory. Okay? Our inventory as of January the 1st. Okay? According to the problem, our inventory was $100,000 as of January the 1st. Okay? So we're going to start off with our beginning inventory. Let me put some commas here just to make it easier for me. There we go. Okay. So let's start off with what we know we had on hand at the beginning of the year. I know for a fact that as of January the 1st, I had $100,000 of inventory in my warehouse. Okay. Now, I also know that during the period of January 1st through August the 5th, I made additional purchases of $420,000. So I'm going to get my net purchases. Okay. January 1st through August the 5th, and we had purchases of $420,000. Okay? So, I'm going to go ahead and I'm going to add those two items. Let me underline here. And then that's going to give me my cost of goods available for sale. So, we're going to add those two numbers together, and that will give us $520,000. Okay, so that is what I had available to sell. That's how much merchandise I had in my inventory in my warehouse that was ready to be sold. Okay, now the next component is estimating the cost of goods sold. Okay, so in order for us to do the estimate using the gross profit method, we're going to start off with our net sales. Okay, so my net sales were $732,000. That is how much we sold the product for. That's the markup price. Okay, $732,000. Now, using the normal gross profit, we can calculate. We're going to go ahead and we're going to get the $732,000, which is my normal sales, and I'm going to multiply by my gross profit percentage of sales, which was provided at 40%. Okay, so we're going to go ahead and we're going to do that to calculate the normal gross profit. How much profit am I making? Well, I'm making 40% profit from the markup. So I'm basically marking up my product 40%. I'm making a 40% profit on the sales. So let me get my calculator out here. So I sold my goods for $732,000. I'm going to multiply that by 40%. That gives me $292,800. That's my markup. That is how much profit I made on the sale of these goods. $292,800. Okay. So now that I have that, I can calculate my estimated cost of goods sold. Okay, so I'm going to get my sales minus my normal gross profit. Okay, and that's going to give me my estimated cost of goods sold. So according to this estimate, the goods that I sold were valued at $439,200. The profit that I made was 40% of my sales, which came out to $292,800. That gives me the actual net sales amount. Okay, so now that I've got my estimated cost of goods sold and my cost of goods available for sale, I can calculate my estimated inventory as of August the 5th, which is the date that the fire occurred. Okay, so as of that particular date, my cost of goods available for sale were $520,000. My estimated cost of goods sold were $439,200. So that means that my estimated inventory as of the end of August, well, as of August the 5th, is going to be the 520 minus the 439,200. So that means that my estimated inventory that burned down was 80,800. Okay. Of course, this is just estimates, and these are valid estimates that are used by insurance companies. Of course, if we are using the gross profit method, we do have to prove that the gross profit as a percentage of net sales had been relatively stable over time. So if we had about 39-38% normal gross profit as a percentage of sales, 40-41%, if it aligns, they usually get an average, and that's the average that insurance companies utilize for cases like this where a fire destroyed all of the inventory and we can't get an actual count of what was burned. Okay, so this is a very reasonable way of estimating your inventory as of a specific point in time based on a gross profit percentage. Okay, so this is the calculation, very straightforward. First, you calculate the top section, your cost of goods available for sale. How much goods did you think you had on your warehouse based on your beginning inventory and your purchases? And then calculate your estimated cost of goods sold, and that is done by getting your net sales and then subtracting your normal gross profit, which is a percentage that is calculated month over month, maybe, or week over week, depending on how the company works. So they have this percentage that they say, you know what, on average, I make 30%, 40%, 50% profit. Okay, and they have it documented to where every time they prepare financial statements, they calculate their gross profit, normal gross profit percentage, and they have that so they can be able to use in instances like this. Once we do that calculation, we can calculate our estimated cost of goods sold. Once we have those two numbers, we simply subtract our goods available for sale minus our estimated cost of goods sold to get our estimated inventory, which was destroyed by the fire. Okay, so that is this particular problem. Please make sure that you plan your week accordingly so you can have enough time to complete your assignments. If you have any questions on any of the other problems that you're working on, please let me know. Please make sure that you do view those videos that are embedded within each of the homework problems if available to help solve the problems. Read your chapter, review the PowerPoint, look at all of the illustrations provided in the book. And then if you have questions, any additional questions or concerns, please feel free to contact me. I am here available to help you in whatever I can. Okay? So I hope all of you have a wonderful rest of your week. And until next time, thank you.